Bringing in an analyst to talk more about Amazon, potential AI upside. Joining us is Evercore ISI Head of Internet Research, Mark Mahaney. Mark, happy Friday. So have investors perhaps been sleeping on Amazon's AI capabilities?
Yes, they have been. And the question is whether they will wake up from the nap. There's a good reason to have the nap, by the way. If you ask most people in the industry, they'll tell you that the AI solutions, the leader appears to be Azure right now. Now, that can change, and that's both a perception that needs to change, but also a solution set that needs to improve and to change too. I think Amazon can do that. I also think there's going to be enough of these these generative AI apps and solutions. I mean, we're just starting, John, to see these come out now. But as you see more of these solutions come out, Booking.com announced something 2 weeks ago. Expedia did previously. There's AI DJ on Spotify, My AI on Snapchat. Even in the small space that I look at, we're just starting to see the rollout of these. And where are they going to occur? Where's the cloud compute going to occur? Where's the cloud storage going to occur? A lot of that's almost certainly going to be there on AWS. So a year from now, AWS should be able to show these accelerating generative AI-driven growth rates for AWS. And if that happens, the stock's higher, the revenue growth is faster.
But I guess, Mark, first of all, Andy Jassy made the case here on Overtime yesterday that, yes, they do have the capabilities. They just haven't been waving their hands about it. But is it clear yet where the profit, the additional profit growth is going to be for AI in the cloud? Is it going to be in having industry-specific models? Is it going to be in having the ability to very quickly train those models? That doesn't seem clear for investors quite yet.
No, I don't think it is clear, and it's going to take a while for it to play out. My guess, our guess here is that OpenAI is probably not going to run the table in terms of large language models. If that's true, and if large language models get commoditized, that's great for all cloud vendors. I find it really hard to believe that all cloud vendors, Azure, AWS, and Google Cloud, are not going to benefit from what is, at the margin, just greater need for compute power, greater need for storage. Generative AI requires, and the AI deployments that we're seeing are more computationally complex, and they can't be run, or they won't be run on-prem. They're going to be run in the cloud. So that should benefit AWS. And I don't think that's reflected in the stock, but let's see it. Let's see it in the numbers. We want to see acceleration in AWS growth in the back half of the year and into next year. And I think AI is going to be one of those drivers. If 12 months from now we're not saying that, then Amazon stock is going to be right where it is today. But my guess is that 12 months from now, we're going to see much faster growth rates out of AWS. And one of the factors is going to be this continued rollout of more and more AI deployments, and AWS should benefit from that.
Yeah, Mark, one of the other ththings that Jassy talked about with John yesterday was the fact that they're investing in and looking at applications around AI across all of Amazon's businesses. And it sort of speaks to this idea of sum of the parts and whether Amazon is greater than the sum of its parts. And I wonder how you think about that flywheel when you do value a company like this.
So, there is some of the parts way to approach Amazon. I've sort of used it on and off at times. You do it in part because you believe that there may be a spin-off opportunity. I don't think we're going to see a spin-off at Amazon. So I just think that if you put together the assets, you're going to see improved free cash flow over the next couple of years. Look, the reason I like Amazon, we made it one of our top picks a couple of months ago, was that we have this triple trough thesis. I look at Amazon and I look at a stock that I think is close to a trough multiple, close to trough operating margins, and close to trough revenue growth. And if we're right on that, these things move together. If the revenue growth reaccelerates, if the margins come off, and that's more on the retail side than on AWS, but if the margins come off the bottom and start rising higher, fundamentally expanding margins and accelerating revenue growth beget higher multiples. And Amazon's multiple is still well off the pre-COVID multiple that it had of, call it 18, 19, 20 times EBITDA. You're at like 14 times now. So there's plenty of space between here and there. Fundamentals inflect up, stock inflects up.
All right. I do want to get your thoughts on Meta, given the fact that it did launch this so-called Twitter killer and that it seems to be crushing it in the first couple of days in terms of downloads and adoption with Threads. Stock's up 140% this year. How meaningful is this to the company, and do you buy?
I'm still a buyer. It's still our top pick, although we're starting maybe to edge off it. Amazon, the risk reward now may be starting to be a little bit more constructive than it is on on Meta. But Morgan, look, I hear you on 140% year to date. I'll also respond to that by saying it's trading at, 17 times GAAP earnings. So it's not expensive. I think it's still the cheapest of the high quality tech platforms that's out there. And then I'm really intrigued by this Threads. I don't know if it's really going to be a Twitter killer. It's just that this is kind of what I call an easy extension of the platform model. So you take your Instagram users and you give them a Threads opportunity. Whether we're really going to turn to Threads to break, to see the latest, cuts and takes on the jobs numbers or on AI deployments. Am I going to really watch people who I think are really influential in these cloud debates? Am I going to follow them on Threads? I don't know. I probably won't. Probably stick with Twitter for that. But there's no downside to Meta for doing something like this. And this is advertising-based monetization. Meta's very good at that, and they're probably a heck of a lot better at it than Twitter ever was. So I don't see why this couldn't be a couple of billion in incremental revenue. That's not 10%, but it's a couple of, 4 or 5% incremental revenue without all of that investment that's required for things like the metaverse. So to me, it's an easy extension. It's a reason to be bullish on. Okay. It's not the reason, but it's a small reason to be bullish on Meta.